And we are live. Hello, everybody, and welcome back. We've got a really great show prepared for you guys today. I've got Arthur Breitman here. He's the co-founder of Tezos, and we're going to talk about the tenuous and interesting relationship between blockchain and AI. Arthur, how are you doing today?
I'm doing great, thank you. How are you doing?
Really well. Really appreciate you joining the show. It's been a couple of weeks off, so really glad we're back. As always, guys, this is a LinkedIn Live. So if you have any questions for Arthur or myself around blockchain and AI or around Tezos, please do add those comments in the questions. I'll do my best to multitask and carry along as we go. And we'll bring those questions in either afterwards or as we go along through the show. So to get started, Arthur, for people who don't know you, could you give us just a brief introduction and your Web3 origin story?
Sure, my name is Arthur Breitman. As you can hear from the accent, I grew up in France, but lived a lot of my adult life in the US and in the UK. And my background is in quantitative finance, statistics, machine learning. Initially, I also worked in AI a little bit. I was a research engineer at Waymo, working on self-driving cars. And my origin story is that around 2014, people were wrong on the internet. They were wrong about a lot of things. And I got really into issues around governance that would arise in blockchain and cryptocurrencies, issues around privacy, smart contract security, and also consensus. And that led me to work on Tezos, which embodied a lot of these nascent ideas at the time, to try to bring decentralized innovation to the world of cryptocurrencies.
Fantastic. So you're well qualified to talk about the overlap between AI and blockchain, having worked on both sides of the house, which I think is really good. I'd love for those people who haven't had any experience with Tezos so far for us to do a quick Tezos 101. So compared to some of the other chains that you were looking at and researching at the time, compared to some of the other models for decentralized scaling and for smart contracts, what does Tezos bring to the party that's different? And what were some of your original principles when you designed Tezos?
So what Tezos brings is it brings scale, it brings governance, it brings innovation without centralization. If you go back to the ideas around Bitcoin, there were this idea that Bitcoin is already, in some sense, ossified. It's finished. It is what it is going to be. It's never going to change. And the main reason given around it is like, well, if you can change, then essentially you have a process for change, and that process can be captured, and that capture can lead to bad things. You do not want a system like money to be modified willy-nilly. The whole point of it is immutability, is the fact that it's very reliable. And at the same time, there was a tension because there was a lot of innovation in the blockchain space around consensus techniques, around smart contracts, around privacy. And for a while, there was this idea that all of these innovations would be folded into Bitcoin. And that kind of disappeared. We went from like Bitcoin will take in the best of these innovations when they're mature. And we went from that to, oh, these innovations are bad actually. And that's pretty terrible. But I did take very, very seriously the idea that you needed to have decentralized innovation. So other blockchain and projects have taken the path of kind of ignoring the decentralization part and saying it's okay, we'll just have, or developers will decide essentially what to do for the chain. And Tezos took the path of on-chain governance, which is to say you have a conservative procedure. So it's not going to change willy-nilly, involving lots of participation and lots of coin voting, but ultimately you have a way to change the protocol in a conservative manner and improve it and upgrade it. And it's done so, and it's done successfully. We're now voting on the upgrade number. Well, it starts with the letter Q. Quebec vote is going to start soon. It's been named after cities, starting with Athens. The current one is Paris. So it's 17th upgrade.
Wow, so 17 governance-led upgrades of the chain.
Or 16 and 17 is about to happen, always with a very large amount of participation. So it's worked beautifully, and it's a lot Tezos to be. It was the first protocol to really do proof of stake at scale, and more importantly, do proof of stake with actual economic penalties for deviating from the protocol. They were like proof of stake protocol before. They didn't have slashing. They didn't have this idea. They didn't actually have anything at stake. So Tezos was the first proof of stake protocol where you actually had something at stake. That launched, and it now becomes the industry standard. And I remember building it and people saying like, oh, proof of stake is impossible. Here's the proof that it's impossible, or it's impossible because otherwise Ethereum would have already done it. And clearly it was possible. We showed that, and now we're also showing that scaling is possible, and you can scale and remain decentralized.
Very good. Let's talk about the topic of scaling, because scaling means something different to very many people, right? For some people, scaling is transactions per second. To some people, scaling is the decentralization itself. To some people, scaling is just that people can adopt it. In your view, what is your thesis around scaling, or the important factors that you see as scaling in Web3?
Right. So the first thing is like, you don't, if you're looking at transaction per second versus scaling, clearly what matters is transaction per second, right? The whole point of scaling is to give you more transaction per second. But if somehow you didn't need to scale to have plenty of transaction per second, if you had an unscalable system that gives you 1 trillion transaction per second, then you wouldn't look to scale it, right? And then with the scaling more formally, for me, it's the idea that as you increase the capacity of the system, as you increase the resources you put in the system can process more transaction. It's kind of like this linearity. So an example that I like to give of a scalable system is firehouses in a city. So let's say you have a city, and sometimes you have fires happening, and then you're going to have the firemen responding, and that's it. And if you double the number of firehouses, you kind of double the amount of fires that you can fight. So you need to spend more money, right? You need to like get those firehouses, but ultimately you have some linear scaling. It has limits, obviously. If at some point your entire city is just firehouses, you're going to have congestion. The fire trucks are not going to be able to cross intersection. But by and large, you have a scaling thing, and that's not the case in most blockchains. If you add nodes to the blockchain, you do not increase its processing capability at all. The reason that scaling is desirable is that it follows natural economic incentives. So if a lot of people are using the chain and are demanding transaction and are starting to pay more for transactions, instead of that money just being kind of like captured by whoever's doing the holding the currency or just processing the transactions, you want that to fund more infrastructure. So you want a way basically to be able to pay more money and have more capacity. That's scalability, and that's distinct from just TPS.
Got it. So it's not simply about having a supply and demand system where those who are doing the work get profit. It's actually about having a system that, as it does more work, it is incentivized to build more infrastructure alongside to support itself.
It's about having an elastic supply, right? If you look at the way that a lot of like early blockchains are designed, including Tezos, you have a fixed supply. Like that's the supply of transactions, and whether you pay a cent per transaction or $100 per transaction, the supply is not going to change. You want the ability to say like, well, if people are paying tons of money for transactions, you somehow want your supply to increase. So for me, that's scaling.
Got it. And what have been some of the other lessons that you've taken from going from the very early days of Tezos to where you are now in terms of preparing for that 17th update, the number of learnings from the updates along the way? What do you think people don't appreciate or maybe don't see from the outside in of what it takes to get to that stage?
I think that even when you have reliable code running, there's still a lot of like operations that happen behind the scenes, and a lot of people maintaining servers, a lot of people maintaining services. You kind of have to have an ecosystem around it. Sometimes I think people have this idea that if you just clone a code base and run something, it's going to run it, and it doesn't. There's really like a lot of people and a lot of community involved in making the chain run, and it's fine so long as people want the chain to run, it can run. And one of the things that I would pride myself on is that Tezos is a fairly low resource chain. People are running Tezos nodes using just a Raspberry Pi, so it doesn't take very high cost, but it does take a lot of people being involved in the chain and wanting the chain to run to make it function. So I think that can be underappreciated.
Yeah, I think we talk about developer experience of how easy it is to code a smart contract, but so little is talked about the infrastructure operations experience. How hard is it to download and host a node? What are the performance characteristics for it? Does everybody need to have a full node? Is there an ideal mix of full nodes and light nodes on a network, or can you actually run the entire network on light nodes? Obviously, there's kind of trade-offs and performance that goes with that too, but I think it's underappreciated.
I think we're also in a very weird space where the technical capabilities of blockchain and innovation has far outpaced the demand. So we have innovated ways of having light nodes, for example, of everyone running their own node, and so we have innovated a lot of technologies that can allow these blockchains to remain decentralized and very, very resilient. But right now, the way that everything works is just everyone connecting to a centralized server, a centralized RPC server, giving them this. Like there's a very strong demand for centralization.
Yeah, and I guess that talks a little bit to where are we on the curve, or actually what is able to connect to a blockchain today? How is blockchain consumed? Give you an analogous example with Midnight. The intent is that we have a zero knowledge based smart contract system where all of the data should remain on the user system, and you create a zero knowledge proof of data that's shared with a smart contract. There are instances of that configuration where you could have some of the data come from the cloud, or some of the data be shared with a third party in a trusted execution environment or multi-party computation. That would change the performance characteristics, but it would dramatically lower the security. And the question is, how many people in the network demand that full performance, that full security, or how many people are prepared to compromise their security infrastructure in exchange for convenience, or in exchange in some cases for performance. And I'm not saying nobody cares about decentralization, but I think the logical conclusion is that we're on a spectrum. Okay, there's a lot of people in blockchain on a spectrum, but in terms of the technical considerations, you've got everything from full decentralization, every part of an application stack decentralized all the time. That's quite hard, right? To having some components be cloud-based, some components be light node, some components be centralized RPC calls, etc. It is a spectrum.
Well, and the thing is, I think, is like economic efficiency favors centralization in general, and so innovation favors decentralization, but economic efficiency favors centralization. So long as you don't have like a force pushing against centralization, you're going to end up with centralization. And it's kind of violent because I think the idea that the force that's in the blockchain world that's supposed to push for centralization, there's two forces. Like one is oppression. It's kind of like maybe we need those systems to kind of be really repressed and oppressed before people care about decentralization, becomes meaningful to them. And the slightly less scarier one, I would say, is rents. It's like maybe whoever happens to be like the lead node provider just starts saying, I'm the lead node providers and I'm going to charge you hundreds of dollars for something that costs pennies. Then people switch. But then it's less about decentralization and freedom of entry, which is a slightly different idea. You're not decentralized, but you're not dependent on a given central actor. So, and it goes to what I describe as like de facto versus de jure centralization. And I'm very much in the camp of like what matters is de jure decentralization and not de facto decentralization. So de jure decentralization means no one has but in principle, no one has a privileged position. There's no special rule for anyone. De facto decentralization is also, and on top of that, no one ends up having a lot of power or a lot of importance in the system. And a lot of people in the crypto space focus on de facto decentralization. They say, they look at Ethereum and they might say, oh, Infura is way too big, Infura is way too important. But de jure, there's nothing specific. There's nothing specific in a protocol about Infura. Anyone could come in and replace that. And it's a little bit of the usual debate between negative rights and positive rights. And ultimately, there's a pragmatic criticism of negative rights that says, what is the value of being free if you cannot have enough money to afford bread, and therefore we need positive rights. And you end up pushing for positive rights, and then no one has bread. And so I think we're too focused in this industry on de facto decentralization. Sorry, too focused on de facto, not enough on de jure. And it goes the other way, which is that because people are saying, well, since we're going to be de facto decentralized, since de facto we're going to be centralized, we might as well be centralized de jure. And that's even the most pernicious thing. And that's why you'll see a lot of L2s with multi-signature and so on and so forth. They say, well, there's going to be a concentration power anyway. What does it change that this power is formalized? And I think that's bad.
Yeah, it's a risk. And I think we've also seen in a number of the different early stage decentralized governance forums. I spent a lot of my time in the Polkadot ecosystem. You can also look at Ethereum. You can also look at others where the token holding has a significant ability for votes to be swung, for capital or treasury funds to be allocated, for updates to go through or not. And so you end up with kind of a decentralized but still super council of large token holding wallets. And it's not necessarily perfect to go to one token, one wallet, one vote, or try and find a way of making it a little bit broader, because then you open yourself up to Sybil attacks or bot attacks and so on and so forth. It becomes a bit more complicated. But it's clear that we haven't necessarily got the perfect balance there when it comes to the open governance side of things also. Trying to digitize human governance is never going to be easy. And watching it being played out by whales on Twitter is definitely not the ideal form of digital governance that I think all of us are striving for.
Mm-hmm.
So we've still got work to do. Let's get into the topic of today's discussion. We're already 20 minutes in, and we haven't yet got to the main topic of today, which is the important area of blockchain and artificial intelligence. Are they friends? Are they enemies? Are they frenemies? Are they destined to succeed, or are they destined to destroy each other, one way or the other? As you said at the beginning of the show, you've spent a little bit of time working in both. So a rarity in that case. I don't know very many people. In fact, you may be the only one that I've ever met who has spent time working in both artificial intelligence and blockchain.
I'm the only person who did an AI to crypto pivot. No, that's not true. Actually, the near people, I think, were in AI, and then they did the AI to crypto back to AI pivot.
Very good. Yes, there've been similar influencer pivots as well, but the legitimate technology builder, founder pivots from blockchain to AI and back again. Talk us through your state of the empire around blockchain and AI. I think many intellectual shortcuts have been taken in saying, AI needs blockchain, therefore they must work together. There is no divine right to any technology.
It's always blockchain people think it's not AI people.
I think it might be. Take us through your thesis.
Yeah, so I think it's like peanut butter and plumbing. I don't think there's any incompatibility between plumbing and peanut butter as industries. I don't think they have a lot in common either. So like, can you do something at the intersection? They're not opposites. It's just that it's very different stuff. So I think, look, the very cynical take that I have is that the main industry today in crypto is selling tokens, is launching tokens. Whether or not it's like DeFi, where does a lot of DeFi come from? A lot of the DeFi come from farming, right? That's what triggers a lot of the activity, more so than just trading. Where does the farming come from? Because people get a token. What does it do with the token? Sell the token. So a lot of the industry is just selling new tokens. And the reason people buy these tokens for different reasons. Sometimes it's because it's like driven by momentum, and I think that's a lot of things. Sometimes it's driven by these shelling games where it's like, oh, I think we all agree that we're going to push this type of thing for a while, and you just like kind of like try to meet the zeitgeist. So that could be a meme, or the meme could be a use case. And I would say AI as a use case can be a meme for tokens without really having any relevance. Like the reality is, like most tokens do not capture any economic activity, any underlying economic activity, and it's funny because there are two classes of people that will tell you that tokens capture the underlying economic activity. They are people who want to sell you tokens attached to a business. They'll say like, oh, look, AI, we're doing AI. AI is a big sector. Buy this token, and then you'll have exposure to AI. And a lot of like the marketing, which sounds like customer marketing, is actually investor marketing. Like they'll go on stage and they'll talk about AI. They're not trying to attract AI companies. They're trying to attract people who are going to buy the token because they say, oh, that gives me exposure to AI. And that's not true because there's no economic link between the two. The other people who try to convince that this is true is regulators, because regulators feel like, if that were true, that would give us some grounds to regulate this thing, but it's not. So very cynically, I think it's like a lot of the industry exists because it gives people the impression of being tech investors when they're not. Because most of the times it's just like no connection whatsoever between the two. So if we're looking now into the use cases themselves, I'm not saying there's nothing. There are some real things you can do. I just think it's not profound. Like definitely there's not this like, oh my goodness, the synergies are so huge. There's things. So very simple thing. I think AI is going to be very useful for formal verification. A lot of formal verification does not actually take a lot of smarts. It's just very tedious, because a lot of the proofs that you have for programs, they're not complicated proof. When you prove a program, it's not as complicated as proving the Riemann hypothesis or even like a high school calculus theorem. It's just very tedious. And AI is good at doing very, very tedious thing, and because you can verify it that it's correct, you don't even, if the AI gets something wrong, it doesn't even matter because you'll see that it's wrong. So formal verification of smart contracts using AI, yeah, that makes sense. But this is more a case of like AI making developer experience for people on blockchains better.
This is tool-based AI usage in the building of things. I guess you can look further down to the right and say, if you start seeing more automation of activity with non-human actors, or if you see a more machine-led creation of experiences, games, workflows in motion, at the moment, there's usually a human with a button, or there's usually somebody saying, switch it off, stop it from working. But the intent of smart contracts is that they run forever, always on, immutable, can't be stopped. The direction of travel with AI could be in the same direction. And so some of the argumentation is, can we allow for more protocol-based AI? Can we allow for more transparent visibility as to how those large language models or how some of those programs are working? Can we tether them to smart contracts so they can't be evil? Potentially. These are, I think, more theoretical than practical at this point in time. Do you see a direction of travel where the two technologies as capabilities enabling use cases fit together?
Not that much. There may be something in cryptography, so in like verifying computation, for example, this type of things, but not necessarily blockchain. Look, at the end of the day, blockchains are made for, they solve one problem, which is the double spending, and so they're meant for transferring assets. If you're not transferring assets, so that's why among the main, like some of the mainstream ideas that people have been running, there's been these ideas of like data marketplaces. I don't think that makes much sense. People do not want to like buy your data piecemeal like this, and they have huge data sets. So I don't think that gets like very, very far. There's this idea. I mean, you could be trading a model. Like at the end of the day, you can tokenize anything on a blockchain. You can tokenize a piece of real estate if you want. There's nothing that stops you from tokenizing a model and selling it. So again, it's not like there's no intersection, but in the same way that I'm sure a lot of people who buy peanut butters are plumbers, and most most people who eat peanut butter also need plumbing. So yeah, there's going to be some intersections, but they're not profound. They're not like different. There's intersections between blockchain and AI the same way there's intersection between blockchains and almost any industry where people are buying and selling things. Decentralized compute, that's one that's being pushed. The downside here is that a lot of training is very latency bound. So if you're doing this over the network as opposed to like in a data center with your InfiniBand connect, it's just not going to be very, it's not going to be competitive. Perhaps inference, but then you kind of end up with the Airbnb problem where in theory with Airbnb, it's like, oh, everyone has an apartment and therefore, when they're not there, it's cheap, they might as well make some revenue. So the marginal cost for them is zero. And then in practice, it's just the fact that you need to maintain it and do a bunch of things means that people run it professionally. So I think you end up with like professional operations. Can you federate some of that? Maybe a little bit, but it's not. I don't think it's very, very deep. You have agents paying each other, sure. And you can have your AI pay your AI using cryptocurrency. They could also be using a payment API like from Stripe or anything else. Maybe there's a slightly better impedance fit with cryptocurrency because you can pay anyone on the internet. You don't need to sign up with anything. So yeah, it's slightly better. Again, I'm not saying there's nothing. I'm saying that people who are saying this is like, the technology they're made for each other are really just trying to ride the coattail of the industry.
Yeah, there's a lot of low kind of low due diligence threshold statements made about the potential, and I think that's fine, right? It's okay to talk about potential, but you don't invest behind potential, or it's not a great idea to invest behind potential unless you have some degree of proof of something happening.
Or no, you only invest behind potential. It's this clip from Silicon Valley, ROI, radio and internet. It's like, no, you don't want any revenue. Before that, you're a pure play. It can be anyone's dream. But if you actually do real thing, then it's never enough.
Fair enough. It gets harder at that point as well. So in your view,
point, I wanted to answer your point from earlier around like, controlling agents, tying them to smart contracts. So I think that's really interesting. And on the AI side, I'm one of those people who take existential risk from AI very seriously. I think it's a very serious topic. I see a lot of people in the crypto space who pattern match basically the dialogue around existential AI to crypto, and they say, oh, they just want to ban open source, they just want to pass regulations and kill, innovation and so forth. They want to ban math. And yeah, I don't. Unfortunately, I think that the pattern match is a little too shallow here. There's a lot of commonalities, but the difference is that I think a world in which there's a lot of crypto is a world in which people are much more empowered and can do more things and are less constrained by governments and bad regulations. And I think that's a wonderful thing. And I think, a world in which you have existential risk is really, really bad. So a lot of the dialogue fundamentally comes from people like not taking existential risk seriously, not saying like, oh, I don't really think that's a thing. And I wish it weren't. It would be a lot more comfortable position. But unfortunately, I think the arguments for it are very, very sound. And even even more than that, the arguments against it are just so freaking intellectually lazy. There's just like no thinking behind it. So like, where's the intellectual opposition to that? I mean, I can name a few people, but like, it's slim pickings. So I would love if we could use blockchains, if I could use my knowledge of blockchains to buy an agent and so forth. But the problem is like, why would they want to be bound by a smart contract? Ultimately, blockchains only have jurisdiction over themselves. They can control what's happening on a blockchain. They can control what's happening on the outside. So if you were running the AI on the blockchain itself, which is not a very scalable thing to do, you're not going to bind it with a smart contract. And the smart contract also would have to verify a lot of behavior. It doesn't know what's a harmful behavior, what's not a harmful behavior. It's a smart contract. It's much, much, much dumber than an AI. So I think you just like push the buck forward in terms of like where the problems of control or alignment exist.
I think I agree. And the one area that has been championed, I take a lot of kind of umbrage in some of the intellectual shortcuts that are taken around the potential of blockchain AI or the target use cases. I think you've also got a challenge with the oligopoly approach to how AI is being delivered. I think you said somewhere in there that AI doesn't want to be bound, or those people who are developing AI today have no interest in being bound any more than the traditional financial services industry wishes to give itself over to DeFi. Right? DeFi has emerged as an area of finance that I think has been competitive. But I don't think there's a single person in a bank anywhere saying, yeah, you know what it is? The current banking system's useless. Let's get rid of that and let's just all go to DeFi. What a good idea.
No, I actually don't. I don't necessarily think that's true. I think, if tomorrow everyone woke up and said, you know what, this existential risk thing is actually very serious. It's a real problem. Then you don't have any conflict of interest at all. I don't think, unless like, except for like a couple of lunatics out there, no one really wants the end of humanity, and so like people would make it work in the same way that if you look at the hole in the ozone layer, that was identified as a problem, and you had overwhelming adherence by countries to say like, okay, this is bad. Let's not have a hole in the ozone layer. But it's also because the opportunity cost of not using like especially the CFC gas and such was very low. So it was kind of an easy call to make. Whereas here, the opportunity cost of like not going very fast and far in terms of capabilities in AI is humongous.
Do you think we will see a decentralized AI that can be competitive? We talked about decentralized compute, decentralized storage. We've seen some of those capabilities in isolation that have been offered, but certainly not at the performance of an artificial intelligence as you would see provided by a Microsoft or ChatGPT or whoever else. Is it feasible to see that?
Decentralized? What do we mean by decentralized?
So if rather than having let's call it open source, powered by the Airbnb model of multiple, GPUs compute over multiple different locations to try and reduce latency. Obviously, it's never going to be as perfect as centralization, but is it possible to compete with large corporations that are developing their models proprietarily and trying to create fiefdoms for themselves?
So I would say yes. So the first thing is that they are not fully open source, but open weight model like Llama 3, which are basically close to the frontier in terms of capabilities. So they might not be exactly as good as GPT-4, and they may not be as good as like what comes after, but they're in a ballpark. But of course, they are being released by an entity with like tons and tons of money, being Meta. And they're not open source, because open source means you would be able to replicate the weight yourself, and they don't really disclose all the data. That being said, anyone can run it, and there's very few restrictions. And I don't know for a fact that this exists, but I'm pretty sure that there are some networks out there giving you decentralized inference, where like you can join a network of like inference, and you'll run your inference on someone's machine. But why would you use it? The thing is, like, inference has gotten so cheap from providers, and if it's just someone's machine, you're not going to have very good guarantees in terms of data privacy. Like, I would trust if Facebook tells me we're not going to store your data while you do this request, I would probably trust it more than a decentralized network where, trust us, and knows the network don't store your data. You can add a crypto to it. You could try to do homomorphic encryption, and then everything is going to be 10,000 times more expensive to compute, so no one's going to do that. You could try to do SGX, which keeps being broken. Maybe Android enclaves might work a little better, so there may be some stuff here, but again, centralized actor can do it. In terms of like decentralized network training a large model, the closest thing we saw to that was probably the early work of Illusory AI, and there's some groups working on this, but why would you do this? Why would you spend hundreds of millions when you can fine-tune existing models like Llama? I think you're pricing a lot of these things out of the market.
Yeah, I think that's an important part there. People probably don't spend enough time on the business case. Is actually the orchestration and the individual setup and the contributions of a system that is distributed or decentralized can actually end up being slower, more expensive, less performant, and ultimately with a poorer user experience. And so it's good. You're going to have to want the decentralization really badly to pay the additional cost.
Absolutely. And the question is like, what are you, like, who is this for? Like, what problem are you solving? And one of the one that people like often bring up is a lot of the IRL chefs that's being applied to these models can give them like a political bias, or they will refuse to give they will refuse to complete their request, and so on and so forth. But people can do that with fine tuning. You don't need to like a lot of these restrictions are removed by fine tuning. You don't need to change from scratch for this. So people have been able to do this with on top of existing models. So that, I think, is like a legitimate motivation for doing something about it, but it's not even a motivation for decentralization. The problem with decentralization is, can someone control this thing? And if it's money, it's very complicated to decentralize, because you have something that's mutable, and you need to maintain a ledger, and you need to have consensus, and you have this horrible technical problem. But if something like a piece of software or a model, the decentralization is not complicated. You publish it on GitHub, and now your model is decentralized because anyone can copy it.
Yeah, I guess the difference between open source and repeatable, copyable, reusable, as opposed to actually a decentralized system.
I shouldn't say you put it on GitHub, so you put it on IPFS. There you go, and there we go.
Now we're decentralized. We've got a couple of use cases that have come in from the chat. Shout out to those people who've been adding comments. Shout out to anybody who's been asking questions. So we've got a couple of questions of people who have suggested potential use cases or areas where they believe blockchain and AI can work together well. Would you be open to going through a couple of them?
Absolutely.
All right. So the first one here from Jean-Michel, shout out JM. Blockchains are the only way to prove who created what data over multiple data sets owned by multiple parties. So
I don't think it proves anything. At the end of the day, the only thing that blockchains are going to do is they're going to aggregate some signatures, and that's about it. I think we're going to see. I think very soon we'll see like secure enclave technologies in phones to prove that a picture was taken by, if it's not already the case. Mm-hmm. So you'll have a picture, and then you'll have a signature by Samsung that says that photo was taken by a Samsung. Then people will like, of course you can take a picture of a picture, but then they have depth sensor, so it'll become like harder to fake pictures and to fake those signatures, because you'll have to have very expensive setups. It'll be doable, but it'll be very expensive. So we'll see this, and then once you have the picture and the signature, you don't need to put this on a chain. It's there. It's attached to the work. Now, what blockchains can do, which is potentially useful, is timestamping. You create something, you want to sign it, you want to say I'm the first person to publish that data, and of course, we've used blockchains for timestamping. And timestamping existed even before Bitcoin. You had the Haber-Stone data system, and you had guard time that was published in the Financial Times. They were publishing like a little hash. And it's a completely valid use case for a blockchain. It's not an exciting one because you can aggregate 1 million signature into a single hash that you put on your chain, every couple of hundred blocks. So if you're looking at it in terms of like tokens or anything like that, you require if you require like one transaction, the value, like the economic value that it brings to blockchain is pennies. So yeah, it's it can be useful to do notarization and timestamp, but like you're talking about pennies. So yeah, you can do this on a blockchain, but it doesn't mean that it's a boon for blockchains.
Come to the next one. This one's from Kate. Shout out, Kate. I'm interested in healthcare. AI decision making can be made more transparent by using blockchain to track and verify how algorithms work and how medical decisions are made. So this looks like accountability, signatures, maybe being able to take a snapshot in time of particular data that was used to inform, or making sure that the appropriate database was inquired of without sharing the data, potentially. What do you think of this one?
I mean, I'm not an expert in healthcare and how this works, but the way I understand it is that you want to have a process, and you want to document the process, and you want to document the decision making around the process, saying like, okay, this person verifies this data, look at this data, and then made this decision, and you basically have you track a chain of accountability and decisions over time. And I think like that's something you can do whether or not you use AI, because people will make mistakes as well. So having this kind of like chain of all the signatures, all the documents that have been involved, all of that's great. It's a great application. That's a great use case. Can you use a blockchain as part of this? Yeah, probably. You could probably also use a centralized database, because you don't have this like massive risk that somehow it's not going to be corruptible, right? If you know the final hash, so the risks are fairly limited. Can you use a blockchain for it? Absolutely. But again, we're talking about things that are making like only a few transactions for blockchain. So I guess maybe I should refine what I'm saying like as a technology, I would say a lot of the blockchains are going, can be useful for this type of things. But we've talked about, these supply chain solutions. I'm reminded of like supply chain solutions have been like a big topics of discussion over the past 10 years. And there were some pilots. And sure enough, people saw benefits, but the benefit you see is when you digitalize the whole chain. It's like, yes, if at every point in the chain, you are going to scan a QR code, save everything, sign everything, and so on and forth, you're going to see a lot of great benefits. It's a great thing to do. And then you put it on a blockchain. Does it help? Sure. But 99% of the heavy lifting is the fact that you've actually digitalized your own chain. So I compared it for a while. The blockchain for enterprise, I thought that the value was kind of the old stone soup joke, where you bring a stone, you make a soup, you add a bunch of vegetables, and you're like, look, you made a delicious soup, and the stone doesn't have much to do with it. So yeah, you can use it, but it's not like it's not like you have this profound need for blockchain. It's a nice thing to have.
I think that talks more broadly to digital transformation. Is, are we ready for digitization and automation of a process before we get to the decentralization of it? And when we look at AI, it enables autonomous interpretation and content creation. Do we wish that to be bound? Do we wish that to be notarized as it progresses, to make sure that multiple parties, either regulators or those parties who are interested in seeing the AI progress, are comfortable that it's not acting in an evil way? Or can it be evil? Possibly. But is that a necessary handbrake that we need to put, or that those who are using AIs are willing to put on it at this point in time? Probably not.
I mean, for medical decision making, I really like the idea of having like really good evidence log of everything. I think it's great. And if you're going to have an AI model that looks at the radio and makes a decision, you know what? Take a hash of the source code that made it, of all the inputs, so that you can reproduce everything, log it. Having good logs is fantastic. It's good practice in anything that you do. So yes, and sure, you can use a blockchain, but most of the value that you'll get without even using the blockchain.
There you go. Everybody wants the thumbs up of yes, you can use a blockchain, but always check the business case. Always check that there is actually a reasonable use for doing it, and that you're better off afterwards.
Sadly, that makes me a terrible blockchain salesman.
Well, no, I think it makes you a balanced one. I think your job isn't here to be a salesman. It's to make sure that we're using the right things for the right reasons. And
Yeah.
some
And
people
again,
may want to use it just for that case.
I'm not saying we can't do. I'm not saying we can't do anything with AI and blockchain. I'm just like positioning myself and I'm reacting to some of the exuberance that you see in my industry, in the blockchain industry, where people saying like, "Oh my God, you absolutely need my solution. It's going to do everything." But if you have a use case and you say like, "Look, you know what? Actually, having a trackable record of everything that's happened would be useful for my use case," that's solely possible. And please build on Tezos. There's a lot of companies around the world that will be more than happy to help you integrate with Tezos for your use cases.
There you go. We've got one more here before we move on. Your thoughts on legal and ethical challenges around blockchain and AI? Are there any obvious ones that come to mind? I can think of a few, but in your view, when you think about blockchain and AI, either separately or together, what are the things that you first think of in terms of ethical challenges or legal challenges?
Well, the legal challenges, I would say, are the bigger one for blockchain in government operations and AI. So, legal challenges is like blockchains are decentralized, they have anonymous actors. So in the way that the government usually works, government is not used to work with anonymous actors. So that's a little strange for them to go on and decentralize and work with anonymous actors. And that can be sometimes a stumbling block. I don't think there's anything unethical with the government using a blockchain. They may have some issue with it. They say like, well, what if there's a bad actor that benefits from more usage of the blockchain? What if we we pay a transaction fee and the transaction fee goes to fund some bad people? So I think overwhelmingly it doesn't. And that risk exists whatever you do. If you're a government and you go and you buy napkins for a White House dinner, for all your napkin vendor is doing horrible thing with the money that they earn. So it's really a matter of degree, right? I would say if 100% of the actors in the blockchain world were just like using all of this to kidnap children, it would probably be ethically dubious to use a blockchain. But obviously that's not the case, and the vast majority of actors in blockchain ecosystem are nice and honest geeks who like to do some sysadmin and run decentralized system. In terms of AI, I would say part of the I'm not an expert on. I don't know enough about the laws, I would say, to say what are the legal challenges of government using AI. Ethical challenges, I would say, probably, if I had to guess about something, the risk of hallucination for AI is probably an issue. Like the risk that you don't have some form of quality assurance, like that the answer could be just like completely out there, would probably be part of the challenges.
Yeah, don't trust everything that ChatGPT tells you, or at least don't trust verify, which is another good Web3 principle.
There's copyright issues as well, which is like, I think the speculation is that a lot of the largest systems were built with massive copyright violations, and you can argue that at the end of the day, it's progress of humanity. It's all worth it. It's no different than someone just reading the books and learning. Yes, but even someone reading the books buys the books, and I would not be surprised if a lot of the frontier models that we see today were trained originally on LibGen, which is this archive of scientific papers. And then after that, it's been washed because now they generate synthetic papers and they train on this. And so it's kind of like buried at some point in the evolutionary history of this stuff. But I would, if you're a government and you're concerned with that, that could be a challenge. I also think that what's going to happen is now that the systems are really, really like, have shown their usefulness, what you'll see is like you'll have companies like Elsevier or Relix and others basically enter massive licensing deals with players, and then they will push very, very hard for copyright regulations to create a moat around their models.
I could see that for sure. I mean, the sad thing is then you're going to end up seeing the Spotification of academic research, and no one gets paid for having their content on Spotify because the margins are so low. Spotify does very well, but the artists get paid very little. The promise there is very high, but in reality, market forces will tell you that actually the reward for those people cranking out that research is so low that it probably doesn't incentivize it.
Yeah, I also don't. I don't think that. I don't think people who do research and publish scientific papers are doing it for. I mean, to be honest, like first of all, the people who do paper do not see money from Elsevier. Like it's a big scam to begin with, right? They do the research. It's paid by it's either paid by the government or paid by nonprofits. They publish it in a journal, and then the journal gets to keep all the money from the copyright. So
yeah, it's not a great deal.
It's not a great deal for the researchers to begin with.
Very good. We've covered a lot today, but I'd love your take at this point in the show on what more is required to see wider Web3 adoption. I think we've challenged very hard on intellectual shortcuts and use cases that really properly make sense. We've also picked up a couple of interesting analogies along the way in plumbing and peanut butter, and enterprise blockchain being stone soup. But above and beyond those points, what do you think is needed to see wider adoption?
But just the moral of the story at the end of the stone soup is that the soup is very good. So, certainly it's not saying don't make stone soup. It's just like be realistic about the value of the stone in all this. What do we need for more Web3 adoption? I think, it's been a long time. So people who say like we're just very early and so on and so forth, it's getting old right now, because Bitcoin's been out for what, 14 years, over 14 years. Blockchains with smart contracts have been around for like a decade. And it still very much looks like a casino. There's some of the realist use case, I would say, non-enterprise use case, are the art scene. I would say is absolutely fantastic, and that's thriving, and that's completely organic, and it's not being like subsidized by VC or subsidized by an innovation lab or something. This is just like, no, there's some people who want to make digital art, and there's some people who want to collect digital art, and they have a medium and it works for them. So that's great. Stablecoin payments, that's like a real very much of a real and strong use case. Gambling. So those I would say at the core. I think probably what we need is I think some evolution in regulations will happen and will be extremely helpful, because essentially a lot of the regulations have boxed out useful use cases for blockchains. And it's big, if you want to do real finance, for example, it's still extremely hard to do that on blockchain. And people have tried, and you end up with like having to jump through more hoops. Regulations claim that they are technology neutral, but they're not. There's a lot of technologies that actually bias against the use of blockchain or against the use of cryptocurrency. So if we win either like court battles, or if regulations evolve in a more thoughtful way, I think the fact that you can automate a lot of finance and you can make the cost of product development much lower, you can remove intermediaries and lower the cost of these primitives. I think that's a real thing. But for that, you need a lot of sophisticated players with a lot of money who are not going to be comfortable, because they're already in TradFi, and they're already heavily regulated, and they don't want to piss off the regulators by launching products, for example, on blockchain. So a lot of the stuff that's launched by traditional actors has been fairly limited. They've been a little gimmicky. And before we see some of that, I would say some regulatory changes.
Very good. And with that, we've come to the end of our time for today. Arthur, thank you so much for joining us on Blockchain Won't Save the World. Really appreciate the insight, the honesty, the being an honest representative for Web3 and blockchain in general. I think the world needs more of that, and that's exactly what the show is about. So thank you so much for joining us. Have a brilliant rest of your day, and stay safe out there.
Thanks, Anthony. Bye-bye.
See you soon. All right.